Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big video for you today, highly requested, an update on Anthony Power and I's sell strategy moving into this bull cycle. We've seen both the price of Bitcoin and many of the Bitcoin mining stocks surge over the past few months. We wanted to talk to you about what we look for when making our buy and sell decisions, what we've learned in past cycles, and our outlook in terms of where we think we're going in the Bitcoin mining space. All of that in today's presentation, plus some news out from Bitfarms. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below, what is your sell strategy going into this bull market? With that being said, let's get into today's video. All right, guys, away we go. Tuesday afternoon, another exciting one in the Bitcoin and Bitcoin mining space. A real special podcast for you today. We're going to be providing an update on our sell strategies, what we've learned, where we're looking to take profits in the Bitcoin mining space over the next few quarters here, and a detailed breakdown of lessons learned. So a lot to go through, Anthony. Before we get into the main event, though, we wanted to take a quick look at the price of Bitcoin, still holding up in that range, sub 119, and the Bitcoin miners, a couple standouts there as well.
Yeah, it looks like it's holding this 117, 120,000 range. So been forming quite nicely in there. Hopefully we get another leg up, get closer to that all-time high of 123,000. But yeah, fairly happy. It did drop very quickly today. I mean, it was at 119 and a half thousand earlier today, and it dropped down to 116 and a half thousand in very, very quick form. But to be honest with you, as soon as it dropped down 3,000, it really started to bounce back, and it's getting back to the levels it was earlier in the day. So Bitcoin just doing what Bitcoin does, and hopefully this range is short term, will bounce back up above the all-time high.
I'm certainly hoping so, Anthony. That's the thought around here at Power Mining Analysis. Now, in terms of the Bitcoin miners, a couple standouts. Bitfarms. We've been profiling Bitfarms on the channel quite closely over the last few weeks, talking about their HPC strategy, talking about the selling pressure from Riot. It appears they've broken that trend. They have some news out today we'll come on to. The other one, Anthony, Cypher. There's more rumors today. Again, Mike Alfred tweeting some sort of deal with Meta in the works or potentially coming down the pipe. So those are the standouts on the board. But aside from that, again, a fairly active day for the miners.
And if we look at the amount of shares traded, we're seeing some really big volumes here. Bitfarms, nearly 45 million. Average volume's about 18, so really positive there. Share price was as high as 134 in all early trade. It's pulled back a bit, but still 12, 13% higher than the start of play there. And magically above that $1 mark. So that'll please the company there, and also keep the SEC off their back if they can maintain that level for the next sort of 3 weeks or so. Cypher, as you say there, speculation. There's been a lot of speculation about this company. We've raised it on previous podcasts, anticipating to hear something in the near future. Maybe we're going to hear it sooner or later. These rumors come out. We heard about the rumor with Core Scientific, and literally a week later it came out as factual. Maybe we're going to get another update on this particular rumor. But the share price taking full advantage today, and I think even as we speak now, the share price up 8%. Mara having a good day, Bitdeer, but actually, as 4 or 5 of the miners in the red as well. So a game of mixed halves at the moment. And Bitcoin sort of in that hovering around the sort of same level it was yesterday. Not too much to pick on, other than the fact that we're in a volatile market, effectively with mining stocks.
Yeah, and very timely for our podcast today, a mixed bag. We're going to talk about that theme of timing these miners a little bit more as we move into the sell portion of the discussion. Before we do, though, Anthony, Bitfarms, I mentioned there was some news, a share buyback program. This is always welcome news to investors, essentially the opposite of dilution. Bitfarms feeling their shares are undervalued and looking to take action on that over the next few years.
Yeah, so they're looking to put in a strategy of maybe buying back about 10% of the shares. That's up to 49.9 million. So they've got that close to 500 million shares at the moment. Purchase 10% of that, and that'll be great for shareholders because those shares will be removed. and every then remaining share has that little bit more value. So plus it keeps that share count down. At the moment, 557 million shares out there. So that's quite, in terms of share counts for the Bitcoin miners, that's the highest I've seen from the stocks that we cover. Bear in mind the likes of CleanSpark and IREN have under 300 million shares at the moment. Riot and Mara have about 350, 360 million shares. So this is significantly higher than that. And it's a good way of appeasing shareholders by doing these buybacks. And the market has reacted positively, as expected, to this type of update.
Yeah, it certainly has, and really starting to move north from that dollar milestone we've talked about over the last few weeks. So good for Bitfarms. Glad to see them on the move. Now moving into the main event, Anthony, the sell strategy. So this is an interesting sector to say the least. Bitcoin itself, very unique with the structure of the code, the halvings, the difficulty adjustments. The Bitcoin miners take that a step further. We've talked about volatility. We've talked about the emotional side of being invested in this space. So before we break down this sell strategy, can you really lay the foundation here? You've been in the space, multiple sectors. You've been working with these companies for years. You've seen the ups, you've seen the downs, some of these black swan events. Can you really set the stage for us here, Anthony?
Yes, I've been in the space probably since like 2020. I bought my first mining stock, which was Mara Holdings back then. Share price was about $2 a share. This was before really they started to become a real noticeable miner. It was a tip given to me by a colleague, and I didn't put a lot of money into it because obviously it was a speculative tip. Within about 4 or 5 weeks, that stock had really jumped to more than double figures, and so that sort of increase in a short space of time got me thinking about what I'd actually invested in, and then started to realize there was more mining stocks. And for those people that were in the space during that period, it was like a bubble. That early 2021, these mining stocks, were going through in terms of pricing, in terms of trading volumes. I'm in the UK, and Argo blockchain came around in terms of notoriety towards the end of 2020, in that very early 2021. It was one of the largest traded stocks on the London Stock Exchange. In fact, I used to sit and watch CNBC in the morning, and the ticker symbols across the bottom would highlight which stocks had been purchased. And every so often you'd see Argo shares being purchased on the ticker symbol, which was uncanny because it wasn't if it was a well-known stock, but actually had notoriety. It was very much a lot of people in the space buying that stock. That company grew to a value of over £1 billion back in sort of February 2021, and today it's worth about £22 million. That's a big drop there. Lost probably 98% of its value over that time, and we've talked about the reasons for that on previous podcasts. We won't dwell too much, but what I'm trying to explain is that bubble happened. Mara share price rallied all the way to $83. The company grew to a value of $8 billion during that period. If you look at today's value, 4 years later, and with an enormous amount of more hash rate, they own most of their facilities. They've got over 300,000 mining machines. The valuation's still nowhere near 8 billion. So what we're trying to say is, that this market is not for the faint-hearted. If you enter at the right time and sell at the right time, it's great, and you think it's easy, and you can get complacent, and things change in literally, a fraction of a day, a week, a month, and so. I've learned some hard lessons. Also made some nice profits in that early part there. So in the early sort of 4 or 5 months of that period, it was great. Every day you were sort of like going in there, buying stocks, making money, and then obviously after that bull cycle of 2021 changed. I think people felt they were invincible. They'd made so much money, and they felt we can't go wrong. I used to follow, a very closely with a friend of mine, Blonity, who was probably doing a lot, equivalent to what we're doing now. Had a podcast, very knowledgeable about all the mining companies. Had interviewed a lot of the mining companies on his podcast, and I looked up to him because he was like an expert in the area. He come from an energy background, so he understood the markets, and he sort of left the space in that sort of end of 2022 because I don't think he lost lots of money, but I think he lost lots of profit. He had a lot of profit in 2021. He was telling me he had lots of shares that he bought in 2017, 18. When these companies started to form, he knew about this. He understood Bitcoin. He understood how the mining companies could make money. And he was very much at the forefront of what everyone's trying to do now. But even that person there, with all that knowledge, didn't know when to sell his shares at the right time. And so he fell foul. And we've not really heard much from him the last couple of years, which is a shame because he was a person in the space that a lot of people knew and understood, and a lot of people followed him. And so this volatility, it's a challenge. Now, we go back to the last couple of years where the Bitcoin price has done really well. In the beginning of 2023, it was $15,000. We see it today, $119,000. We had an all-time high just over a week ago, $123,000. Surely we can't go wrong now. However, I think we'll have a chat through and talk about this last couple of years in terms of mining stocks and what that's meant for the mining stocks over that period, Bryce.
Yeah, we certainly will. And thanks for setting the table there for us. So interesting you talk about the marathon valuation, 8 billion. They also didn't have 50,000 Bitcoin or $5 billion of Bitcoin at that time. So you can definitely see how these market caps go up and down. You mentioned you've learned a lot of lessons, Anthony. You've made some good trades. We'll refer back to both of those throughout the discussion today. But I think it's important to understand what you're dealing with this sector because it truly is unique. So as we fast forward to where we're at now, you just mentioned Bitcoin breaking all-time highs. You can see it's been published around the world, Anthony. Mainstream media is catching on to Bitcoin in a big way. We've broken 120. I think we're up at 123. And we feel this is just really the beginning of where we're started to go here on this Bitcoin bull run. So the miners, we've been talking about this table you put together, the multi-time frame, starting to look a lot more green than maybe 6 months ago. And this has got us thinking, Anthony, okay, maybe it's time we dust off the sell strategy. We put out a few of these videos last year. So obviously with the strength in Bitcoin, it's been a strong couple weeks here for the Bitcoin miners as well, Anthony. If we look at your updated chart here, the heat map we like to refer to, the 1 month column specifically, you can see getting quite hot for the Bitcoin miners, green across the column there. And it got us thinking there's a lot of situations over the past 18 months where we've seen spikes in the miners like this. So maybe we'll start there and look at these opportunities or when people maybe should start considering to take some profits.
Yeah, I mean, even if you go back over this sort of last 18 months, there's probably been about 3 or 4 occasions for each of the miners when there was an opportunity to sell and take some profits. And I think people have just, been holding back, hoping that that might just go a little bit further and we just see a retracement. I can think back to March, April last year, we saw that CleanSpark share price rally. The company was valued at 600 million October 2023. By March 2024, it had valued at $4 billion and the share price was heading towards $25 a share. That share price came bouncing down all the way down to single digit figures. And there was an opportunity to sell. The directors managed to get their sales in. I don't think as many of the retail investors managed to get their sales in at the same sort of price, but there was opportunities. And, if that share price hits $24, $25 and you've bought in at sort of $2 or $3, then that will certainly be an opportunity to take some of the profits off the table and do that. And equally, looking at the likes of, you've got a Soluna side there. I mean, Soluna, it's one of the smallest mines we look at the moment. Only have to go back 2 weeks ago, the share price was $1.50 and the share price today is 60 cents. So again, you can take a look at it. Go back a year ago, it was over $6. A little bit longer than that, it was over $8. And so there were opportunities for people to sell some of these shares and take profits. IREN's probably had 3 or 4 times in the last couple of years where the share price heading towards, I think last year it reached that $15.50. And again, it reached similar levels towards the end of 2024. And then in 2025, it's gone past that position. But in between those hits, the share price has dropped all the way back down to $6. So, people could have been selling and then rebuying back in at a lower price and then waiting for the next ride back up there. So I'm hoping that people have got a sort of like a strategy in place there, a plan in place to do this. I certainly learned my lesson back in that early 2021, 2022, as many people did. I've been in many chat rooms, a lot of people still holding some of the shares. I bet there's people that are still holding some of the Argo shares, and today the share price is, like I say, it's 98% lower than it was back in 2021. But they're hoping that, something might happen, and the chances are it probably won't happen. So you have to sort of like have a plan in place. That's the key thing. And we'll talk more about, some of the strategies that we use in a second there. But every miner, they don't all rise at the same time. So you don't think, today's a great day for mining companies, so I'll sell all my shares. You need to sort of like take every miner individually, look at how they're performing operationally, how they're performing financially, do a lot of due diligence, and then set some targets in place there so that you can actually recover some of the profits. You don't have to sell the whole amount of shares in one place. You can sell a percentage of shares as the share reaches a certain target, which is something I've been doing. And I've probably, over this last 18 months, maybe made 50 buy and as many sell trades over that period of time there, because I found it's more beneficial to take maybe slightly less profit, but take a profit. And some of the profits have been substantial, over 100% profits. That's when you can really, benefit from learning in this space and realizing that these miners are so volatile. They will rise quickly, but they'll equally fall as quick.
Yeah, you're certainly right there, Anthony, and a bunch of nuggets listening to your discussion. So, looking back on my own career here, I learned many of these mistakes last year. I had a lot of these sell targets in place, didn't necessarily follow them. We'll talk about that in more detail. But really, the reason for that is this greed feeling. And the interesting part of the Bitcoin mining or Bitcoin proxies, even the treasury companies, is the correlation with the underlying asset. And we expect Bitcoin, at least on this channel, to do great things over the long term and through these 4-year cycles. So a lot of times you correlate Bitcoin miners with Bitcoin, and that was almost one of the flaws I made last year, Anthony. I had set up my structure based on predetermined Bitcoin levels, not realizing how differently the miners would react throughout the year. Case in point, what you just talked about with Soluna, IREN, CleanSpark spiking throughout the year at different times. Now, part of that flaw for me was understanding where we're at on this Bitcoin cycle. We've talked about this a number of times. We feel we're through that bear trap or elbow of the cycle, moving into what's known as renewed optimism. You can see the chart from Caleb and Brown, basically breaking down the different segments of this 4-year Bitcoin cycle. And you've mentioned a number of times, Anthony, that 6-month window or 180-day period post-halving. So I wanted to get your thoughts on the correlation between where we're at in the Bitcoin cycle and the miner moves themselves, based on your experience over the last 2 cycles here.
Yeah, I mean, obviously the key thing now is this cycle does differ from previous cycles. We've had the number of public companies starting to buy Bitcoin because they've been allowed to do that now. And obviously January last year, we had the 11 ETFs that were approved by the US government, and they've had an insatiable appetite for buying Bitcoin. So the differences in this cycle are slightly different from the others. Although we've seen up to now, we've still seen that same volatility with the mining stocks. I've just indicated there, even though the Bitcoin price has probably had about 15 all-time highs in the last 6 months, all the way through the election, we've got a very pro US president at the moment in terms of Bitcoin, and he also has a Bitcoin held in one of his public companies, and we'll talk about that in a second. But this cycle feels different from the last one in the fact that there's more optimism, there's more adoption in terms of more people buying it. I look back to say 6 to 10 months ago when Hodl 15 brought out his slides, and there was only 70 companies at that point in time, and to get on that list, you had to have about 3 Bitcoin. And today, I think it's something like you've got to have nearly 30 Bitcoin to get in the top 100 companies. That shows you how much things have changed just in a short space of time, and it's changing on a daily basis. There are companies buying literally thousands of Bitcoin, jumping on the treasury management bandwagon that we've seen in the last literally last few months. So many companies doing this strategy, benefiting from the markets. We're seeing that adoption coming in there. From a cycle point of view, I expect us to go high this year. All the analysts that we've been fortunate to meet, quite a lot of analysts been in the room when the likes of Cathie Wood and Van Eck have been talking about their predictions for Bitcoin and saying, effectively 250,000 or 180,000 respectively by the end of the year. We've still got a long way to go there, and we've only got just over 5 months to do it. So, but we are seeing that sort of that movement. People are also saying that this cycle is so different, we won't see a bear cycle again like we've seen before. Now, a bear cycle, if you think about the bear cycle last time, Bitcoin price in 2021 got to 69,000. And by the beginning of, or the end of 2022, December 22, it dropped all the way down to 15,000. So effectively, it dropped 80% of its value. Now, I don't think there's too many analysts out there believe that Bitcoin is going to drop another 80% from its current value or its future value if it gets much higher than this because of that amount of adoption. Those ETFs are buying more Bitcoin in terms of, 4 or 5 times the daily production. It's an insatiable appetite of buying out there, and there just isn't an amount of Bitcoin to purchase. The miners aren't even selling that Bitcoin. They're producing it. They're not even selling the Bitcoin. So where are they going to buy this Bitcoin? And with those economics, you can only see the effect really is that, we're going to have some movements up on the upside in the very near future, because we talked about this, I think, yesterday's podcast there. The ETFs have bought, over 35,000 Bitcoin in the first 12 days of July. And in that period of time, there was literally 3 or 4,000 Bitcoin produced. You just can't do those sort of numbers. It's just not, economics says you can't do it because, everyone have to be selling Bitcoin and I'm not selling any of mine and you're not selling yours. So hopefully that price will increase there.
Yeah, I'm glad you brought those points up, Anthony, about the differences this cycle, because that's one that I was thinking about as we put this podcast together. You talked about the public companies buying Bitcoin. We've got the list from HODL 15. That's updated weekly. You can see BitcoinTreasuries.net real time has Trump Media and Technology in 5th place. They've now started purchasing Bitcoin. So not only public companies, but public companies associated with the president. We've got the ETFs. You can see a nice visual here demonstrating those inflows you just discussed, Anthony. And the third angle I wanted to just mention quickly is the regulatory side. So obviously countries like El Salvador, Bhutan, we've seen adopting Bitcoin, jumping head first, even the United States. And we covered this on another podcast entitled Crypto Bills Passed, introducing crypto or Bitcoin focused legislation that again has fundamentally changed the Bitcoin ecosystem compared to those other cycles.
Yeah, absolutely. We've already seen the Genius Act has already been signed by the president, and the other 2 acts, the Clarity Act and the Anti-CBDC Act, they're now going through the houses for vote on there. But it's expected that those will be approved as well. So again, more and more understanding adoption of this space. And if you go back even 12 months ago, no one was expecting things to happen this quickly. It's really very, very short space of time, but so much has happened in that short space of time, so much positivity, and we're positive for the rest of this year at least.
Yeah, we certainly are. So now we'll talk about the specifics here of the sell strategy. Now, there's no right or wrong way to do this, Anthony. If you Google how to sell stocks, you'll see a million different strategies out there based on technical, fundamental, percentages, moving averages, losses, gains. It really comes down to your comfort level. But as we said, we've learned a number of lessons here. This is the chart that I used last year when we did our sell strategy. So selling at those predetermined Bitcoin levels, the 95, the 120, which interestingly we've just crossed. Now, reflecting back, Anthony, I can remember in late November when Bitcoin rallied, we surpassed that 95,000. I looked at this table. You and I talked about the table. And again, I felt the miners weren't where they should be based on that price of Bitcoin. The fundamental flaw here was I was assuming all the miners would move in unison with Bitcoin or some sort of a general pattern there. But when we saw Bitcoin hit that all-time high, the miners were all over the map. I got concerned. I didn't act. And then we saw Bitcoin pull back and the miners go into that 2 or 3 month pullback. So that was an example of a plan in place that wasn't followed, basically rendering the plan useless. Now, you've put together a little table here highlighting some of the risks in the sector. So this is why you need a plan, you guys, because these black swan events, again, many of these are unique to Bitcoin or Bitcoin miners. These can happen at any point with no warning. And if you don't have a plan in place, or you have a plan that you don't follow like I did, Anthony, you can end up holding the bag or paying the price. So next, can we talk about some of these potential negative catalysts, I guess, that could happen in this sector?
Yeah, and these are more, these most of these have happened, so it's not like a case of they will happen. They've happened already. So, the Bitcoin price is certainly volatile. It has, it was as high as 69,000 in 2021, and within sort of just over 12 months of that period, it was at 15,000. So that to me sounds like the Bitcoin price crashing. We also saw that in previous cycles in 2013, 2017. The difficulty over this last 18 months has been unbelievable. We talk about the difficulties effectively being a second halving for miners. We had the halving last year that reduced rewards by 50%. If you look at a period of 18 months, I would suggest that the miners have had another halving effectively in terms of how much impact that difficulty has had on their production. Energy prices, well, we've seen energy prices spike in the last couple of years. Obviously, the geo economical, political position around the world doesn't help. When you've got oil prices, they can change, and if they change, then you find out that electricity prices and gas prices change, and you need electricity to mine Bitcoin. So that becomes a challenge. We've seen it quite stable in this last sort of 12, 18 months, but before that, we saw some ridiculous power costs across, even in the US there, and causing miners to curtail much longer. Miner dilution and debt there, we've seen that occur. Obviously, the miners are, those miners that have gone to the market and said, we're going to dilute shares, the impact of that is immediate. And that erodes the long-term value for shareholders, because you're then bringing more shares in, and the market value of the company doesn't actually rise when you issue more shares. It just means that those shares are valued effectively less than the small amount of shares were valued before you diluted. And then we have this last part, which I put in there, was a sentiment, can turn bearish, and we've seen that as well. We've noticed, even since we've been doing the podcast over the last 18 months, we know there are times when people move away from the space, and the number of subscribers or the number of listeners to each of the podcasts drops. At the moment, we're seeing that bounce back and people coming into space. Bitcoin price is doing well. Mining stocks over the last month are up probably 50 or 60%, some as high as 90%. When that happens, people get interested again. They come back into the space. They want to take all the education up, listen to all the analysts talking. But equally, things can change, and that can happen. That's happened 2 or 3 times in the last 3 or 4 years. Just that where we've got bearish, and therefore you have sort of like major sell-offs. I mean, you mentioned about November there, and you're absolutely right, Bryce, that the share prices for miners was not correlated with the Bitcoin price. I think we did a podcast at the time saying, had the mining stocks decoupled from Bitcoin? I know now that even from my portfolio, the November value of my portfolio was probably better than it is today, slightly better than it is today, even though we've had this really good rise in 2025. That was an opportunity to probably sell more stocks last year and take those profits. And then, obviously buy back in as those share prices drops. But the key thing is, I know that now. I just didn't know that in November. So what can I do differently to avoid making that mistake again? And what I've been doing now is not unlike your table there, you set their targets and percentages. I've actually set some sell prices for some of my miners. And in the last 3 weeks, quite a few of those targets have happened. So I sold some shares in certain companies. And because the share price hit those targets, they're automatically sold. And I've got 3 or 4 more sell prices in for a number of miners, which is not too far away. But you know what? I'm comfortable at those levels. The fact I got profits and the share price might have increased since that day, hey, that's great. I've still got some of the shares. I didn't sell all my shares. I just sell tranches of shares, and take some profit off the table, and then see how the share price goes. If the share price drops significantly, and there's value in that company, operationally they're doing well, financially they're doing well, then it gives you an opportunity to maybe buy some shares back in at a lower price, reduce your average, and then when the share price does rise again, you're actually increasing potentially the profits at the same price that you had initially at. So there are lots of little strategies there, but I choose to put those sell prices in advance, and then just if the share price hits them, that's great. And if the share price comes down, it gives me a second chance to think, actually, do I want to buy in and dollar cost average my stake down there so that I can potentially get some profit, but I make sure that I'm choosing the value miners. That was a difficulty in 2021. Every miner was doing well, irrespective of how well it was performing operationally or financially. And I think, you could have thrown a dart at a board with 20 company names and every company was doing, fantastically well. I mean, those days it was like I used to enjoy waking up at 6 in the morning, switching on the financial news, and then just like the day was spent doing some trades. And for that first 3 or 4 months of 2021, I don't think we'll ever see a cycle like that again. It was absolutely ridiculous. Now it looks like it's more managed, but you've got to take the opportunities when you feel fit. Don't think the share price is going to rocket to hundreds of dollars in the near future because you've seen a few posts on social media that suggests that. Make your own decision when you want to sell. If you've bought the share price in a reasonable value and then you've seen it rise and it's got to a percentage where you think, actually, I can take some of my investment out of there and let the rest of the money ride a bit further, then that's a strategy to use. We've got a load of earnings coming out in the next month or so now, starting with Mara Holdings on the 29th of July. So, take some time to have a look at the high level numbers for the earnings there. We'll certainly be covering a little bit more detail on the podcast. Use that as part of your due diligence to help you plan better. But certainly that's something I've done. I've certainly looked at buying the value miners rather than just buying, all the miners that a lot of people were doing in 2021.
Yeah, and it's a good point because remember in 2021, Bitcoin miners were really the only public company proxy. So as you say, Anthony, they were really moving in tandem as a group with Bitcoin. We're not seeing that necessarily this cycle. So even listening to you there, you hit on a lot of the key strategies: valuation level, opportunity cost, fundamentals of the business, which you and I focus on, or even percentage-based sell strategies or target levels based on predetermined percentage returns or losses even on the sell side. So with that being said, Anthony, one other, I guess, X factor I wanted to get your thoughts on here. The miners themselves obviously understand this is a cyclical business. We've seen a big attempt this cycle specifically to diversify revenue. We did a video this week about HPC AI opportunity. We've done the chart that talks about strategy move forward. There's only 2 miners still in the pure play category. So this was the other component I wanted to talk about quickly. Do we need to sell miners, or do you think these miners are going to continue to grow into long-term energy plays, unlike maybe the cyclical or trend plays we saw in the last cycle?
And the challenge is how long has the Bitcoin mining business got to go really? And we've mined 20 million Bitcoin at the moment. There's another million to be mined. That's going to take the best part of 115 years to complete that there. So every 4 years we have this halving cycle. At the moment, rewards are 3.125 Bitcoin per block, and that will reduce by 50% in less than 3 years, and then 4 years from that, reduce again by 50%. So as you can see from the table, the majority of miners are now looking to utilize, because of a lot of things we've already said on the podcast, in terms of predictability and the strength of some of these contracts that we're seeing, early contracts that have been signed for HPC. So if you look at pure play, the only 2 pure play miners at the moment now are Mara Holdings and CleanSpark, 2 of the largest Bitcoin miners out there. I mean, Mara has the most hash rate, and then CleanSpark, along with IREN, have the second largest hash rate. Both planning, Mara's planning to get to 75 by the end of the year. CleanSpark are planning to get to 60 in short time, and maybe grow from that there. They obviously see something that maybe I'm not seeing at the moment, but they see potential. Maybe they think if the other miners aren't growing hash rate, it gives them an opportunity to grow and take that market share of all the hash rate. And if you think about the global hash rate, it's gone up 500% in the last 4 years. And so, will it go up another 500% in the next 4 years? People are starting to feel it's got to that 1,000 exahash. It's starting to balance out a little bit. So we're not seeing as many new machines coming onto the market. And a little reason for that is because it's not necessarily Bitcoin miners production that's an issue. It's more so finding the actual buildings and infrastructure to put these mining machines in and to mine at the power cost that you need to make a reasonable margin from Bitcoin. And that's the issue. If you think about, the companies that have got the sites there, or trying to find the next site, that's can be quite challenging. CleanSpark have got, I think, 32 or 33 separate sites for Bitcoin mining. The likes of Riot have got two. IREN have got two. It's, to managing 32, 33 sites, and then you've got to find the next site and then the next site. And these sites can be 12 megawatts, 15 megawatts, 20 megawatts. You've got Riot there with 1,000 megawatts on one site. You've got IREN with 750 megawatts available on their site there, of which they've utilized most of that for that 50 exahash. There's some real challenges. So it's going to be an interesting period this next year or so as we find out all those miners that are progressing towards a HPC strategy. Are they going to be able to land some sort of a deal? We seem to like the co-location deal because it takes away some of the risk and the capital required to grow that. We've seen some of the miners absolutely look at the fact they want to buy the GPUs themselves. IREN, Hive, Digital are certainly progressing that route there. And can they attract the revenues that the sort of hyperscalers like Amazon and CoreWeave and Meta can attract there? Because if CoreWeave are paying Core Scientific the level of contract that they were before they put in this purchase offer, how much would CoreWeave be making in profit to deliver that type of revenue towards Core Scientific? So, maybe IREN and Hive and Digital looking out, let's cut the middleman out here, let's do it ourselves. Have you got the necessary ability and commercial acumen to get to that same level as a CoreWeave, as a Meta, as an Amazon? Time will tell.
It certainly will, but interesting again to see the companies themselves diversifying and trying to protect that investor value throughout the cyclical nature of Bitcoin. And as you say, Anthony, again, a unique industry, the barrier of entry or the difficulty continues to go up. The reward or the Bitcoin reward continues to go down. So I definitely think this space, if you are a pure play miner, will continue to be a challenge moving forward. And I know personally, I've updated some of my sell strategies for some of these HPC players because I do think they have ability to grow into a longer term, more sustainable component of my portfolio. So again, as you say, time will tell. So in summary here, Anthony, I've put together a few of the key points you've brought up throughout the discussion. Number one, you guys, having a plan and holding yourself accountable to that plan. If you're not going to hold yourself to it, you might as well not even make the plan in the first place. I think we all agree, Anthony, the plan itself can be unique to you and your situation, but the importance of having something in writing, in place, that you review on a regular basis, extremely important. The other two that we both do and really like, journaling our trades, documenting them. We both publish those in Patreon as well. I feel that keeps me accountable. And joining a community or having someone to talk to. You and I bounce ideas off each other constantly. I know yesterday you helped me out taking profits on an option trade that I'd set up last week. Whether that's a one-on-one partner like you and I have, a Patreon group, even being a member of the YouTube channel, having a community to hold yourself accountable definitely makes a big difference.
Absolutely. And we bounce a lot of ideas off there. We look at the markets every day. We look at all the news coming through every day. We've done the analysis on the miners as and when we get updates and earnings. So we have a little bit of knowledge about them. I mean, you can never stop learning in this space. I'm learning new things every day, and I've been doing this for over 5 years. So, you can never stop learning, but it does help. I think if I look at where I am now and where I was in 2020 when I entered this space, it's a whole different landscape for me now. I can sort of start to see value in certain aspects of the miners, and that's proved to be really helpful this last sort of couple of years as we've gone into this, what we call now the bull cycle. Has helped me, but all the way through that, I probably had about 40 or 50 sell trades during that cycle there, just taking some profits as we go along there. And sometimes not taking profits and being disappointed. So it's made me sort of revigor and sort of make sure the next time the opportunity comes along, don't make the same mistake, because these things happen really quickly. And as I said before, the volatility of these mining stocks. You can look at the likes today. Bitfarms is, was up 15, 16%. We've seen mining stocks. I've seen mining stocks up 50% in a day, and people think it might go up another 50% the next day, and it not doesn't always happen that way. So you have to be disciplined, really, and it's hard because your natural thought is if I leave it another day, I can get more. And believe you me, it never hurts to take a profit.
No, it certainly doesn't. And that's a perfect segue to points 2 and 3 here. So, number 2, predetermined exit points, sell orders. I know you do this based on dollar values, Anthony. I use percentages. Again, it doesn't really matter how you do this, but having some sort of a system, again, predetermined in place. I've found, Anthony, and I think you would agree, we can't predict the price of Bitcoin in 2 minutes, let alone 2 years, or the price of the miners. It's virtually impossible to find the bottom or top of any cycle. So I've found dollar cost averaging in and out of positions to be the best way for me to get the most effective returns. Would you say that's your preferred strategy as well, Anthony?
Yeah, I set myself some targets that I feel that percentage of profit is a reasonable profit to take. I'm never here looking to 5, 10x stocks like I know a lot of investors out there trying to do. And good luck to them if you can get those. And we've seen it happen. We've seen some amazing trades recently. I think it was Bitcoin mining guy. I think he 10x the stock in the space of about 2 weeks. And hats off if you get in at that level and you make the right purchase. Open Door was another one. Smarter Web Company was valued at £5 million one day, and within 2 months, it's a £1 billion company. The share price was 3p and went all the way up to £5. That's 170 times the original price. So if you get into those trades at the start, you do really well. But I've been fortunate, in buying some of these mining stocks at what I call, good prices, and then taking some profits as we go up there, and that's helped me out. And the other thing is I've still got a couple of stocks that for 2021 haven't really performed anything like that, and actually some of these stocks are relatively big names, and so it's good to have some of those stocks as well, because when you're making profits on the ones that you're selling, you also need to think about your treasury management in terms of capital gains. And so I've been sort of like using the opportunity to sell off some of those stocks there to reduce my position in some of the less value stocks, and save that sort of capital gain taxation that the taxman loves to take off me every year.
Yeah, he certainly does. And that's a whole nother discussion is which type of accounts and tax advantages or tax strategy. But a great point you make to offset some of those gains. And the final point here, and this is one that I've really learned and struggled with in my career, being patient. And I don't know if it's having kids now, Anthony, or what the case is or experience, but looking for opportunities as they present themselves rather than trying to force opportunities. And as we started the podcast, we looked at some of those spikes with CleanSpark, with Soluna, with IREN last year. Those were opportunities presenting themselves when I was looking for a preset or predetermined opportunity that I had created in my head. So I think just observing what the market is giving you, taking those opportunities as they come, and realizing that you will be presented with entry points or exit points again. And this is another one, Anthony, you've taught me a lot over these years. Just because you exit a company doesn't mean you don't like it, doesn't mean it's not a good company or it won't grow. It may have just got a little bit ahead of itself, and you can buy those shares back a day, a week, a month later at even better prices. So for me, the patience is probably one of the biggest lessons, specifically in this market or sector, because of all these various factors we talked about.
Yeah, absolutely. I say there's a couple of stocks this week where the share price did really well, and I was able to, reach the target, and there was an automatic sale. So, I'm quite happy on that there. And if the share price goes up another 10 or 15%, that's fine. I've still got some shares in that stock, and I don't worry too much the fact that I've, maybe missed an opportunity in profit. I haven't. I've made profit, and so that's the way I consider it there. And, the days when you make profit are far better than the days that you wish you'd have made profit where the share price has been falling.
They certainly are. And it reminds me of a fitting quote: you can't go broke taking a profit. So always nice to lock in those gains. This was a great podcast, Anthony. I know I've learned a lot. We talked about some of the high level strategies, what we've learned, some of the maybe stumbles we've had in the past. Now, some people may be saying, well, okay, that's great. We want specifics. If people are in that boat, Anthony, we have an option for you there as well through Patreon. You and I both publish each and every one of our trades, why we made the trade, our journals, our portfolio, our model portfolio, everything we've talked about in today's podcast, but specifics with real world numbers and real live money in our own accounts. So I wanted to throw that in there. I know you're very active in the community as well, and a great way to get specific details on how we're conducting our sells and buys.
Absolutely. And every time I do a purchase or a sale, that trade gets sent to every one of the members. So they immediately know that I've been, processing something around a certain trade, and it gives them an understanding. And sometimes I'll even put the reason why I've done that particular purchase or sale as well, to give them more insight. What was my thought process? And then once a week, I'll certainly put up my portfolio, put in there about all the sorts of the key points that I'm thinking about. What's my, my potential moves going forward. And so it just gives people a more, a perspective to look at. I'm not here to sort of tell you to follow what I'm doing, but this last 18 months has proved to be pretty productive and pretty much profitable all the way through. I don't think I've sold. I think there's only been one trade in the last sort of 60 trades where I've sold only at a loss. So I've been quite pleased with that, and that was probably a trade under $500. So.
Yeah, that's great. And I know we're both getting quite a bit more active in our personal portfolios in light of the moves we've seen in the market here. So a great way, again, like we say, to be a part of a community, hold yourself accountable, and for a few bucks a month, potentially save yourself some big returns on either sell or buy opportunities in the Bitcoin mining space. So with that being said, you guys, let us know in the comment section below, what is your strategy? How are you feeling about the miners? And which of these lessons or mistakes have you personally made yourself in the past? Hit the like button, feel free to subscribe, and we'll see you back here tomorrow.